Hey, welcome to the 24K Life podcast. I am your host, Derick Gant. I am the author of the 24K Life Code. What code? The code. The code that you need to understand how you can get the most, the best out of yourself. And in order to do that, I specifically talk about finance, but we bring other people in to talk about other variations of finance, to talk about nutrition, to talk about spirituality, to talk about health, whatever it takes you to crack your code to your personal greatness is what we're here to do. So today we're bringing in an income expert. He is going to talk to you about why he bolted from the financial service industry and decided to approach life a little bit differently, but yet still successful. And that's the whole cool part about the code. You get to find your DNA matrix that helps your life elevate. And we're going to invite Chris in 1 second, but I want to ask you to like, share, and subscribe. It's the best way that we can reach thousands, if not hundreds of thousands, and hopefully one day millions of people that are seeking out opportunities, insights, and wisdom on how to elevate their life, how they can personally take control and do more and do better. With that, hey, everybody, here is Chris Miles. Chris?
Hey, Derick.
Welcome to the 24K Life podcast, brother.
Man, it's such an honor to be here.
I am glad people say that, and I'm always surprised, like, oh, the honor's mine. I mean, most people haven't dove into the 24K Life podcast, but they will be, and we are hoping that we can help people like you help other people like the ones, our listeners and audiences, to elevate their personal lives. So I as a financial advisor for over 30 years, I stopped counting 30 years ago, Chris. Or not 30 years ago. When I hit 30 years, I stopped counting how many years I have been a registered investment advisor. But I know more than anyone that there is more than one way to elevate your life financially, physically, mentally, socially, relationship-wise. And so why don't you start off and tell us about the beginnings of your financial expertise, your financial career, and why you bolted from it?
Yeah, I mean, my beginning started when I was a kid, right? Where money wasn't a great thing. It was a scarce thing. It was always about, I hear from my dad all the time. He was a great guy. I mean, he taught me good values of hard work and integrity and things like that. But at the same time, when it came to money, it was always a scarce thing, because he was like the guy that someone like Dave Ramsey would look up to. He was the penny pinching saver, right? He's the guy that was like, he's like, you don't spend anything, you save everything you can, and that was his thing that he taught me. But at the same time, he also taught me things like, well, you can't afford it. What do you think I am, made of money? Money doesn't grow on trees, And even he would say, he's like, I'm going to work until I'm dead, because money, like my job will literally kill me. Because by his 40s, he already had strokes and heart attacks from stress. God. And I didn't want that life. And so when I went to college, of course, I was the first one in my family to do so. My intention was actually to become a business consultant. And from there, I realized, if I'm going to be a business consultant, instead of just getting my MBA, shouldn't I have real life business experience? Mm-hmm. So I took a sabbatical from college. I dropped out with like one class to go for my bachelor's. And I said, let's get some real life experience first before I go back. And the first business that came up that intrigued me was actually being a financial advisor, right? Okay. And I didn't realize anybody could become a financial advisor. I thought I had to like really audition for the part, because I said, okay, I took a few banking and accounting classes in high school, but I wasn't like an economics major. I was a sociology major with a triple minor in psychology, ballroom dancing, and Japanese. Right. So it wasn't really the financial mind you'd think of, but I was always good at math and that kind of stuff. So I did it. I didn't realize they'd take anybody who could pass the test with 70% and not have a criminal record. So it wasn't very long where I realized, these aren't financial experts. These are just we really just people just trying to do our best to help others. Mm-hmm. And that's what drew me in. I thought, if I can learn something about money and even give my dad even 1 year of his life back where he didn't think he had to work until he died, and then I learned about money too, wouldn't that be worth it? So I started down that path and I stayed dropped out of college, never went back. I loved being an entrepreneur. I was 100% commission only type of advisor. And I did that for several years. But then after a while, my dad said, Chris, when are you going to sit down and advise me? So I sat down with my dad. The first time he ever opened up his finances to us, right? So he opened them up to me. He had been stuffing the money in his 401k. He paid off all of his debt, including his house, in 18 years. So he's very proud of that. Again, Dave Ramsey would have loved this guy. And so anyways, he did everything right. And he said, okay, Chris, I want to retire. I'm 61 years old. I'm done. How can I retire? And I said, Dad, well, based on how much money you've got saved up right now, you better hope you die in 5 years, because that's when you'll run out of money. He said, all right, well, don't want to die in 5 years. What's another answer here? And I said, I don't know. You did everything right. You did everything by the book. Everything that we teach as financial advisors, you did it all. You've been stuffing your 401ks. You've got this. Of course, Y2K didn't help you, because that helped set them back a little bit, right?
Right.
But I said, well, maybe if you just keep saving a little bit longer, you can do it. But you couldn't do it today. Like, not realistically, not unless you want to die sooner, you know? So that bugged me. And it really bugged me because a few weeks later, I'm speaking with one of my friends. I trained to be a financial advisor, but then left to go do real estate investing. And he's raking in the dough with him and his dad. In fact, his dad doubled his income as a professor at the local university. I thought, from my financial advisor limited mindset, that I thought, well, come on, that's too good to be true. No way that's happening, because I just sat down with your dad 4 or 5 months ago, and I was mad he didn't invest with me.
Right.
And, but he's like, no, man, we're doing it. And finally, my friend, his name was Doug, he asked me a couple of important questions. He said, Chris, how many of you guys, how many of your clients are really financially free where they don't worry about running out of money? And he got me on that last piece, right? Because I had retired clients, retired doctors, and people like that. But the one thing I knew is, deep down, like in the recesses of their mind, their fears were they would run out of money.
Of course.
Even the ones that were in the stock market, they still thought they'd run out of money, right? Like, they were still worried about the stock market, even if they weren't in it. They were, of course, they would watch CNN. That wouldn't help either, right?
Absolutely.
So I said, well, none. Well, good job, Chris. Way to go. He's like, how about this, Chris? How many of you guys as financial advisors are financially free, not off the commissions you're earning, but actually doing these mutual fund investments? And I thought, well, let me think. And I thought there might be one guy in the office that was. I found out later he wasn't either. He was just, as they say in Texas, all hat, no cattle. But for the most part, I was like, well, there's guys still working here since the late 1970s. So maybe none of them. He said, there's your problem. I'm like, well, then give me the answer. I won't give you the answer, Chris. You just got to argue with me that stocks are better than real estate. I said, listen, okay, I'm willing to be open here. Give me something else.
Right.
And so he said, all right, if you're serious, read the book by Robert Kiyosaki, not Rich Dad, Poor Dad, because I'd read that a couple of times. He said, read Who Took My Money. He's like, read that book first, and then listen to this radio show that, like a local AM talk radio show put on by these real estate investors, and then we'll talk. And so I started doing that. And it kind of led me down a path where eventually I realized, okay, how can I reconcile this? Like, I know I can have a better path of focusing on cash flow and passive income versus just the accumulation theory that I've always been taught as a financial advisor. And eventually you got to the point, I'm like, I had this, kind of this crisis, right? I'm like, what do? Do I keep on the same path or not? Eventually I left being a financial advisor, stayed on as a mortgage broker instead, dropped my licenses and everything that way, and then try to learn how to do what they did. And eventually later that year, when I was 28 years old, I was able to be retired. I was able to quit. Even though my goal before was, if I can be lucky enough, the market smiles me enough, I could retire at 40 with $2 million, living on 3% a year, that kind of stuff, right?
Right.
But I was able to do it much, much faster by focusing on passive income versus just accumulation. And that's where it kind of
you're 28, you're 28 and you're doing your 100% commission thing. You spent a year, you're telling me you spent a year in investing in real estate. So what did you buy?
Less than, actually. So I did some real estate, like rentals. I manage my own properties. I don't do that anymore. I hate managing properties.
Well, we're talking 28 within that 12-month period or less, according to you. What did you do? What did you buy? Did you and your dad, did you grab your dad and say, okay, I found a way out for us? And what did you do?
No, it was, like I said, I had rentals. So I started.
So you had rentals before?
No, this is after.
Okay.
This is after. So after I left being a financial advisor, I started. So I ended up selling out my starter home, turned it into a rental. Okay. So I turned that into rental, stripped the equity out of it, sold it to an investor, then turned around and subleased it to a renter as well. So I basically stripped out all the equity and then turned it into a rental.
Right.
I did that. Then I also did some things like with lending, like lending my money to other real estate investors and things like that, getting paid on the money. My dad even did a little bit of that too himself.
So are you saying that you took some money and you became an investor, or you lent it to investors?
I became an investor, and I even lent money to investors too. So I
Okay.
did some properties myself, but then I also lent money to other investors and things like that.
Okay.
So
And
I
so
started. Mhm.
at this point, how much, you don't have to tell me exactly to the dollar, but you're talking about, hey, I created this ability to retire in less than 12 months. How much did you have to put into, you and your dad to put into these various resources of real estate in order to accomplish that goal?
Yeah, I didn't do any investing with my dad. He was doing his own thing. I did my own thing.
Okay.
But in total, see, I only had to hit 3,500 a month at that time. I only had like maybe, I think it was like $70,000, something like that.
All right. And so were you like just pinching yourself every morning when you didn't have to go to the investment banker business and you were cash flowing $3,500? You just had to be pinching yourself like, God dang, this is it.
Yeah, it was a shocker. I did not even believe I could have done it. Like, I was like, wait, it's that easy, And I'm not saying like, someone's just going to take 70 grand and make 3,500 a month, right? There were some good, unique situations and good timing of the market that helped with that too, to give me those opportunities.
Mm-hmm.
But I mean, even today, like if someone want to make 3,500 a month, I would recommend they need to have at least $350,000 to do that.
Are you talking traditionally, or are you talking in real estate?
In real estate, yeah. Okay. Even if you want to be a passive investor, not an active investor, but a passive investor.
Okay.
You can definitely make between 10 and 12% a year pretty easily doing that kind of thing.
Okay.
But yeah, back then there was even investors willing to pay like 2%, 3% a month on hard money, right? Mm-hmm. So you do the math. You have $100,000. You could be easily making $2,000 or $3,000 a month just from that alone.
Right.
So that's kind of how it started for me. Also, one thing was interesting that helped even boost that income even more was separate from real estate. I was a mortgage broker, like I mentioned, right? I was still doing that. And I remember one of my friends who was a real estate investor asked me, he said, Chris, do you like doing mortgages? Because he got to the point, he's like, listen, it's got to be more than just the money for you. It can't just be creating passive income, getting out of the rat race, as Kiyosaki would call it, right? It's got to be something more.
Right.
And I said, well, I like teaching people about like ways to, use equity from their home, use it to invest and things like that. But I hate paperwork. I hate dealing with underwriting and all that kind of crap. He said, well, then Chris, why don't you just find somebody to do it all for you? And it was an interesting perspective because, I mean, you probably get this already. You've been around for a while, but I was taught more from a scarcity mentality with the financial firm I was with.
Right.
And it was always about how, you want to keep every bit of commission for yourself, right? Don't split commissions if you don't have to, that kind of thing.
Right.
And then all of a sudden he said, yeah, just go find a guy to do it all for you. So I remember I went to the owner of the brokerage, the mortgage brokerage I was at, and I said, is there a guy that's kind of like a nerd that loves paperwork in this company? He said, yes, talk to Clark. And so I talked to Clark. I said, listen, Clark, if I just give you people served up on a silver platter, they already want to do the mortgage. I just need somebody to do all the legwork on this.
Right.
Would you be willing to do that and split me 50%, 50-50? He said, of course.
All day.
So he did. So I would spend maybe half hour talking to a client and say, great, go talk to Clark. And I'm making like $1,000, $2,000 a month. These checks would be coming in the mail. And I wasn't even doing this as a business. Like I was legitimately like just talking to family and friends. That's it. In fact, it was so weird, like how much passive income I had created. And it took me so much by surprise that when people would ask me, Chris, what do you do? I couldn't tell them I was a financial advisor anymore because I wasn't, right?
Right.
I was like, I would just tell them to stall. I would say, I sell drugs. I was like, I would just say that, because I'm like, how do I describe a guy that's kind of like doing investing? I kind of have a business, but I'm really spending maybe a couple hours a week at most in this business. I'm really just kind of sitting around twiddling my thumbs. In fact, to fill my time, I actually started as a part-time contractor teaching people how to buy and sell stocks, right? How to do stock trading and stuff like that. So all the money I was making on the stock trading side was just all bonus. It was just all gravy that I could then use to go and invest. And that's really what I was spending my time doing in like 2006.
Excellent. So how long did that model kind of go on for?
That model went until 2007. And then 2007, some partners and us got together. I don't know if you've heard of a guy named Garrett Gunderson.
Yeah.
He wrote the book, Killing Sacred Cows. Mm-hmm. So I knew his, some of his partners and stuff. And so we ended up forming a business together that eventually became Wealth Factory down the road. So I kind of came out of retirement to start teaching people how to get out of the rat race. Funny story though. The people that we were mostly our clients were real estate flippers, right?
Okay.
People that were flipping properties, right?
Mm-hmm.
Well, once 2000 about mid 2007 happened, things started getting a little wonky with the banks.
Yeah,
And I remember trying to do a cash out refinance in July of 2007, and the bank said, "Oh, you know what? We just made a few adjustments. Make your credit score 2 points higher, and we'll give it to you in August." And then August rolls around, they say, "Oh, we just changed the rules last week. Now we need you to do this, this, and this. And then if your credit stays up high in September, we'll let you do the refi." And then September rolls around, they said, "We won't do any more cash out refinances." This is before Bear Stearns. This is just when the banking industry was feeling the stress, right?
Yeah, but if you were in our industry per se, if you were financially astute and talking about it and doing it daily, you knew in 07 that 08 was coming.
Yes. You knew it. You saw something was fishy, didn't you?
Well, like you said, things started to change and the money wasn't as easy and flowing as easy. They were starting to put some restrictions, stupid ass restrictions.
Mm-hmm.
So how did you make it through? Did you own a lot of hard assets 08, 09, or were you just in a different ball game?
Yeah, I even bought a new McMansion and everything by that point too, right? That had a bunch of equity. And and that's why I knew about what was going on with the banks, because I was stupid. I did the Dave Ramsey method.
Okay.
Which is I was trying to pay down my equity because I knew as a mortgage broker, if I ever need equity, just get a refinance or just get a HELOC, right?
Still get it, right?
Yeah, because we'll give a loan to anybody. Hey, we had the 4-pay option. You could pay less than interest only on some of those payment options, right? You remember those negative AM arms and stuff like that? I sold some of those too, And so that period of time, like I just thought, well, if I ever need equity out of my house, I'll just pull it out. Well, that didn't work so hot, did it? Because once mid 2007 rolled around, I couldn't get equity out of my house. They wouldn't let me.
Right.
So I wasn't liquid. I had some liquidity. I had my basic emergency reserves, but not nearly enough, especially where I was starting a brand new business with partners and I had just increased my lifestyle. The next thing I know, I was no longer out of the rat race. Now I was back in the rat race. In fact, so badly, I was negative cash flow, meaning that I had more expenses than income by about $15,000 a month between my business and my personal expenses.
Okay.
So I was now in the hole. I got to the point where eventually by 2008, I was about just over negative $1 million. Therefore, I was over $1 million more broke than the homeless guy on the street.
Right.
So I had no money at that point by 2008, no money, no credit left, because now I was turning in my Mercedes. I said, "Here, take it. You're going to take it anyways for me. I'm not going to make any more payments on this. So here you go." And then they auction off for $30,000 less. And then they're calling me saying, "Hey, can you make a $1,200 a month payment?" It's like, if I could have made a $1,200 a month payment, I would have kept that car. So I went through a really rough patch. By the way, I also cut off my passive streams of income, because when I got in that partnership, they said, "Hey, we want you to be really focused here. This is a mission that we're on to save people. So cut off your stupid passive streams of income." Dumbest thing I could ever done. I don't know why I listened to Garrett about that. It was so stupid.
Was it a request or was it a demand?
It was kind of like a passive demand. It was like, "Hey, listen, if you want to be around here, you should play as a team player." Right. And I'm not the greatest team player, right? Like that's why, most financial advisors don't even like me on their shows, but
no, man,
but that's the thing.
I wanted you on the show because it's like, there's more than one way. There's more than one way. And even today, I recommend, my son's a real estate agent. I recommend hard assets all day long right now. Yeah. And for a while I have. But anyway, let's not talk about me. Let's go back and finish your story. You got me sitting on the edge of my seat.
Yeah. So he said, "Listen, you've got these different streams of income coming in. I want you focused just here, right? So get rid of these other passive streams, including even the mortgage partnership that I had." He's like, "Hey, get rid of that because we have our own mortgage partnership. So basically, let us make all the money in the company, but you don't get any of it." Right. So that's really what it came down to. And so that's where I realized I was now in the hole $15,000 a month, because I raised my expenses by starting this new business. I'd now cut off streams of income. I'm making $5,000 or $6,000 a month at this point now, instead of I was making like $10,000, $15,000 before. Now I was down to $5,000 or $6,000, but I was spending like $20,000.
Right.
So something had to change fast. And so that's where, like I said, it turned into Mercedes. Eventually in April 2009, I remember got a knock on the door. We tried to short sell my property that I bought, the new McMansion, right? I tried to short sell it. However, the mortgage lien holder was owned by a company that's owned by Lehman Brothers. So they wouldn't take any short sale offer. So eventually, after 16 months of no payments, they finally just foreclosed on it. So a guy came in my door, said, I just bought it in cash at the courthouse for literally less than half the price you paid for it about 3 years prior. When can you get out?
Yeah. When can you, we'll be here tomorrow, noon.
Yeah.
My kids.
Well, I told him, I said, listen, my wife here at the time, like, I was like, my wife is about to have a baby any day now. It was about to have our fourth child. I was like, can we pay you $2,000 rent to stay for 2 more weeks? And so we did. You know, I basically scrounged together every dollar I had. Right. Eventually found a cheaper rental home to move into after the baby was born, and basically downsized everything. And in that process, I'll tell you, like, it was a rough 1.5 to 2 years, because I did stop teaching people how to get out of the rat race. Once I was back in it, I just can't teach something I'm not doing.
Right.
So once I was back in it, I instead started teaching people how to find money, because during the recession, that's really what people were concerned about. Because many of them would say, hey, what you teach sounds great, but I just don't have the money.
Right.
And I wouldn't say this verbally out loud, but in the back of my mind, I'd say, listen, your situation is so much better than mine right now.
Yeah. Right.
I bet you I could find the money. And so I would tell them, like, listen, if I can help find the money, would you pay me? Yeah, I would. Great. And I would just show them creative strategies to find money, right? Whether it's like ways to consolidate or pay off debt creatively. And I created a whole new formula for paying off debt called the cash flow index. Okay. That now I'm even hearing other people teaching right now. So it's kind of cool to see that my formula has a life of its own now, partly thanks to Garrett. But like, you know, I had that new strategy of paying off debt, ways to save people on taxes. We worked with a lot of business owners, different things to start tracking people's money, like just ways to free up cash that way. Like, I was really just teaching them to do what I was already doing in my situation, because I didn't want to file for bankruptcy. I was too dang stubborn. So I had to figure out how to narrow down that $15,000 month hole to just zero at least. So I'm paycheck to paycheck, and then get positive again. Right.
Right.
So I was teaching that, and it actually took off. It actually helped our company avoid bankruptcy, which was good. And then, you know, things blew up from there, especially in the chiropractor and dental space. At that point in 2012, I launched Money Ripples. I broke off from that partnership and did my own thing, and teaching the same stuff. But once I started getting back into passive investing, guess what? I started teaching our clients again.
How to get out of the rat race.
Right? Yep, how to get out of the rat race. And so
I love it.
I love it. Fortunately, I was able to get out of the rat race myself, and by December of 2016, that time I needed about 10,000 a month, because I had 8 children to take care of at that point.
8?
8, yeah, blended family. So I remarried. Remarried in 2016, and my wife at the time, she had 2 kids. I had 6. So obviously she loves me more, and we blended our 8 family of 10 together, and so for me to get out of the rat race that second time had to be 10,000 a month.
Yeah, you have not had it easy, and to persevere as an entrepreneur through all of that, even through some really shitty decisions, man. I mean, and you know, even though they weren't your, you know, thought, somebody else encouraged you to get rid of some revenue. Grant Cardone would have probably beat that dude Garrett to death to get rid of your passive income.
For sure.
But you know what, man, it's funny. I don't really like to mention political people, but you know, it's like Trump. He's going into the White House. They're like, dude, you got to get rid of your stuff. And he's like, okay. And he just never did. It's like, I'll bet you $1 billion you won't ever do that again. You won't get rid of passive income regardless of the scenario, or you won't go into the scenario, because it's not worth giving up all the years and things. Now, luckily, it's like riding a bike. You learned how to do it. It kind of blew up, and then you did it again. So that is great. Right. So tell us like, who's your ideal person or business person or executive that you like to help, and how do you help them?
Yeah, they're generally decently high income, like business owners or professionals, you know, even W-2 employees. Usually they make, you know, at least 100 to 200,000 a year. But the key thing is the people that we help at least one-on-one, the best. So those have usually at least 150 to $200,000 that they could be deploying somewhere, using that to create passive income. And that's the thing. They're really looking to buy back their time, right? Right. They want that time freedom, and they believe that the money, the passive income, is what gives them that. Our goal is to really get you to be work optional. You know, you work because you want to, not because you have to. So you have enough money, you could quit, but you don't have to, right? Like I've got a client right now, he's about 89% of the way there, works for Hollywood. And I can tell you, after another strike, that's going on in Hollywood. And this is after COVID shut them down for months.
Right.
He was very fortunate that he actually had passive income coming in during those months, right? In fact, that if anything slowed him down, it's Hollywood, you know. But that's the cool thing is that like still they gave him options when most of his coworkers, his other colleagues in that industry, you know, they would be scrambling. They would take on whatever crappy project that was there for TV or movies, and he would wait for the right project because he had that passive income.
But isn't that? And I don't pay attention closely enough, but I'm guessing, isn't that why we started seeing like these name brand movie stars like doing TV commercials and voiceovers and all those types? You would never see, you know, when I was a little kid, you'd never see, you know, some movie star doing a Sassoon Vidal commercial, hair shampoo commercial or something. But now it's like it's not even a issue. You see all these really super famous people doing TV commercials and all the other kind of things.
Yeah, well, especially when it's internet is so much different than it was when we were growing up, right? Because commercials, like my wife and I, we show kids commercials we were raised with. We're like, we know the jingles, we know the exact words to a song.
For sure.
They don't have that today. Today, it really is about how do you keep people on the top of your mind, that awareness, right? And so that's what actors do. Like Ryan Reynolds does an amazing job staying relevant.
Oh my God, that guy is a beast in business.
He's amazing, right? I think he's worth something like, was it 450? 350 million, something like that. It's up there.
Dude, he's in the Billionaires Club. Go look at his most. He's got 2 or 3 recent deals that he did, like with Mint, the financial company, and some other company. He's in the B category, bro.
Dang,
I'm telling you.
I gotta see that updated number. I love Mint, by the way.
I don't track it. It's like my son he sends me TikToks, and he was showing me this TikTok where he had. I can't remember exactly what he did, but he had, I think he owns Mint, and then he was doing commercials for Mint, and then he, you know, which he's famous already, and then he did some other commercial, and between all these deals, then he sold it. He was like worth $1 billion. It was crazy. I'm like, dude, he's an actor and he's killing the business game silently.
Exactly.
Silently. So that was awesome. So, you know, you are very well versed. You are very well diversified. What would you tell someone that couldn't afford, they don't fall in your range? I won't say can't afford. Let's say they don't fall in your range. And let's say that their family income is probably $100,000 and they're 9-to-5ers. What would you tell them to start doing to start to move the needle in a more passive income mindset? And I know that's really big, and I know it depends on their age and the number of kids. I mean, I'm a financial guy. I get all the extraneous things. Just in the big picture, what would you recommend?
Yeah, I'd recommend, it kind of goes to the same 3 pieces of advice I give for people with more money, but it's just a different strategy with everyone. I've been teaching people to get lean, get liquid, and get out, right?
Get lean, get liquid,
lean,
get out.
Mentioned
I love it.
I mean, Mint is a great tool that I use just to help track income and expenses, track both sides of the equation. Because savers love to track the expenses, but they ignore how to make more money.
Right.
While spenders ignore the spending, but they love to track the income, right?
Exactly.
You know, do both. That's what a steward does. Steward takes the best of the spender and the saver and puts it into one person. They're willing to use money to make it work for them, but they're willing to be wise at the same time. And that's a great tool.
I love it. Get lean. What was the second one?
Get liquid.
Get liquid means get out.
Yeah. So get liquid means having cash available.
I am telling you, I was interviewed the other day, and they said, well, what advice would you give people? And I said, become a minimalist. I'm not telling you to move into a tiny house. I'm not saying that, but I'm saying stop buying stuff you don't need. Stop all the Amazon orders. Get lean, right? Get minimize all the purchases. Purge, you know, and just start focusing on being really cognizant of what you need and not what you want. So I get it. That's awesome.
You don't have to be Dave Ramsey to the extreme, right? You don't have to live on rice and beans, because even though he says that kind of crap, I remember actually when I was going broke, I was listening to his show quite a bit, partly just to make fun of him. But I was listening to his show, and this woman called in, and she was depressed because she said, yeah, I've been paying down my debt. I paid like $70,000 of debt in the last 2 years, but I still have $90,000 left to go on my house. Right. So she's not mortgage free.
Right.
But she was calling in discouraged. And she's like, yeah, I've been spending the last few years. I mean, I've been doing this. I've been budgeting. I've been living on rice and beans. And then he stops her. He's like, you've been doing what? Well, I've been living on rice and beans. You say live on rice and beans. So that's what I've been eating for the last couple of years, just rice and beans. And he starts laughing on the air. He's like, what? That's stupid. Or as he says, stupid, right? He'll say, he's like, that's stupid. He's like, that's just a figure of speech. He's like, you still get, vegetables and stuff on it. Like, he's like, I'm just telling people to track their money. And then after he got done laughing, it was dead air on his radio show for like 5 seconds or so.
Right.
And then all of a sudden you hear her say, oh, well, I did. And that's the kind of destructive scarcity that I teach against, right? Like, I agree with you. Like, minimalize the things that really just don't matter in your life, but still enjoy life. That's why one of my ebooks on my website is called Beyond Rice and Beans.
Beyond Rice and Beans.
Today, right?
Right.
Yeah. Get beyond that. Like, you don't have to be cheap. You can be a wise steward of your money without having to be so cheap that you destroy your life and the relationships in it, So there's a balance,
What's so funny, man, is that you're 100% right. I've been asked before, like, doing a news thing or whatever. They always call when there's some kind of crisis. They want to call the guy that's been around for a long time. So they call me, you get on the news, and they say, well, how do you describe, what you offer? And I say, well, I am between Dave Ramsey and Grant Cardone. I'm in the middle, right? You can't put all your money in your investments. And, Grant will tell you having a savings is stupid. Okay, Grant, well, you got millions of dollars in cash somewhere. So don't spend your last dime on an investment. And at the same time, you don't eat rice and beans. Like, Dave Ramsey's like, you don't live your life at all. So I'm in that middle area where, you can really do it. And I feel you are as well. And I'm not making a comparison. I'm simply saying that it's logical to do these things. And then when you have a surplus, to figure out how to expand it, right? So you're not going to stop when you say, hey, I need 16,000 a month to make my deal work. You're not going to stop at 16 of passive income. You're going to keep going until you feel comfortable and your last of your 8 of your tribe is out of the house and through college. Then you can maybe start taking a look at how you might want to maneuver from there. But the whole goal is passive income, which is called passive, meaning you're not actively working.
That's right.
So, yeah, bro. I love it.
And that's where those next 2 points come in, right? I mean, you gotta at least be a wise steward of the money that you have and tracking it and keeping an eye on it. Because whatever you track and measure will grow and improve, right?
Absolutely.
But then it's get liquid. This is one where everybody teaches you to put your money in prison, right? Like, think about it. Every employer you go to work for says, oh, you lock your money in that 401k to get that match. It's okay. But if the market goes down, sure, your match now goes down the toilet with your money, right? Now you just lost double. But they're always saying, lock up your money there, lock up your money in equity in your house, which is the mistake I made before the last recession. And so get liquid means having cash available. So kind of going against Grant Cardone's point, right? You do want to have cash available. You want to have the cash, especially if you want to turn to passive income.
So how much cash do you recommend one of your ideal clients, they're making a couple $100,000. How much cash do you recommend they have accessible to themselves?
Well, accessible to invest that's on top of their emergency fund, right?
No, just the emergency. Let's go with the emergency part.
Yeah, the emergency fund, I'm recommending lately more than I was before. I'm at least 6 to 12 months of expenses, monthly expenses. So their expenses are, say, $10,000 a month. I want them to have at least $60,000 to $100,000 that we don't invest.
Yeah, no, I'm with you. I just straight up tell people $100,000 of cash. I just straight up say you need $100,000. Yep.
And it sounds like a crazy number, but it's true. I mean, that's why when I get people saying, well, I have 25,000 to invest, what do I do? Nothing.
Nothing? They can't stand that answer because they were ready to go do something. Nope, nothing yet.
Yeah.
Nothing yet.
Even if you could invest it, right? Like 25,000, for example, right? I get a lot of people with 10,000 or 25,000. They'll say, now what? I got some money. Most savings I've ever had in my life. I'm like, good. Congratulations. That's the way it should be. Keep going, right? Because if you invest, say, 25,000 and you make 10% passive income, that's 2,500 a year. That barely moves the needle on your money. That doesn't really change your life. What changes your life is if you can keep that money growing and going, right? And so many ways to generate more income, even beyond what you're doing. Find ways to create more value for your employer. If you're an employee or a business owner, find ways to keep being more efficient and profitable in your business to then take home more money to then invest, right? Yep. Get it up there. So yeah, I agree. Like anything, for most people, usually anything over about $50,000 to $100,000, then we can go in and deploy that into different types of alternative investments. And that's the get out part, right? The get lean, get liquid, and get out.
Right.
Once you got money liquid, then we get it out to work for you, right?
Mhm.
That's where we could be doing things like turnkey real estate. Not where you manage a property, where somebody else helps you find the property, manage it. Could be across the country in a better market. Because I always laugh when people in California say, well, real estate's horrible. Well, yeah, it is in California.
In
It always has
California and
been.
Florida, it's horrible in Florida and California for sure.
Yeah. Yeah. It's like, yeah, you don't want to be in those markets. You want to be in the boring markets. To me, boring is sexy, right?
Well,
Like
you
the
know what?
less risk I take, the better.
That's the misnomer. That's the advice that people don't want. And when you give it to them, they look at you like you're the idiot. But you're like, look, investing is like watching paint dry.
Yeah.
Saving $200,000 is like watching paint dry. You might, even if you went up $1,000 a month, you're still like not happy. Because it's taken so long. But that's the true nature. It's the long game. And if you could figure out how to learn along the way on the journey on how to take 1,000 and make it 2, and how to take 2 and make it 4, now it speeds up. And now you're not focused on the investing as much as creating. And I'm not lecturing. I'm just kind of saying what I believe you would be telling people. So just focus on how to create more and make that the fun part, because the investing part is boring.
Yeah, it can be. It's funny because you say that, like, there's a lot of times I get clients, especially when they have, say, less than $250,000 to actually invest.
Right.
And which is a good sum of money that you can do some good stuff with. You can usually make at least 20 grand a year of passive income.
Right.
But I tell them, once you get that money deployed, it's going to feel like watching grass grow a little bit. Because
now what? You're like, now what? Well, you've tapped your 250 out. So now what is watching that grass grow?
Exactly. You might be waiting a couple of years before you reinvest that extra cash flow you've been getting in from those investments. I mean, depending on how much you're saving, you might be able to do it multiple times in a year, but you're most likely going to be waiting at least a year or 2 before you do the next thing. And that's okay, because it will, once it starts to happen, it goes faster and faster and faster.
Absolutely.
It's that compounding effect, right?
Absolutely. So let me ask you this last question, man.
Yeah.
So what do you think about, and I don't have an opinion. So, well, maybe I have an opinion, but I have a small opinion. I usually have big, bold opinions. So, what do you think about like real estate investment trust and, and these partnerships or general partnerships where you put in a little bit of money and somebody else is buying apartments in Texas, or, you live in Alaska and somebody's buying apartments in Florida or Vegas or somewhere. What do you think about those?
The private ones, there's some good ones out there that can be decent, but when people usually see real estate investment trust, like the typical REITs, like in a mutual fund sense, they suck.
Okay.
I mean, and I've seen this happen a lot, like even in the last few years, because I'm in a lot of real estate mastermind groups, and a lot of, especially a couple of years ago, a lot of my investor friends, they were like, man, these hedge funds are awesome. They're coming in, these different groups, these REITs and things like that, they're coming in and buying 20% over appraisal.
Right.
So there were strategies by my real estate investor friends saying, sell to these guys only because they will pay 20% over appraised value.
Right.
Because they don't care about the value of that. They don't even care about the cash flow, right? They're just sitting on them for the most part.
Yep.
They just want to build up a portfolio, because after 2020, especially, there was so much money out there. Money managers couldn't deploy money fast enough. They're like, just give me anything. I'll take any piece of crap you've got. I will buy it. Right. That's the problem. Like money managers, especially when there's a lot of money and there's a ton of crap load of money being still printed by the feds today, more than they should be. If they say they're fighting inflation, they're actually creating more inflation still.
Right.
But all that money flow is still happening. People got to do something with that money. They're going to buy really turds. Where on the private end, like if I go with people that actually can know and actually talk to, right, the actual investors, I mean, they're easily say, yeah, I can pay you 10%, 11, 12% contractually easily. Right. Because I'm going to make a lot more. I'm going to keep all the profits above that. I'll just use you as my bank. And those things have been great, especially if they've been through like recessions, right? They have been through full market cycles. Don't go for the people that said, well, I've been investing since 2017 or 2018 in real estate. Yeah. Guess what? Everybody made money in 2017 and 18, 19,
exactly.
20,
what about 07, 08, 09?
Exactly. You got to get people that good track record that have been around the block. They've had their teeth kicked in a few times maybe, and they had to pivot their models to make them work. Right. That's why I like boring is sexy. They usually are the most boring investors because they know exactly what strategy works and they just keep doing it over and over. That's where you want to see your money going. All
right, Chris. Well, how can people get a hold of you, man?
Yeah, best way you can do that, you can go to moneyripples.com. That's our website. You can also follow our podcast, the Money Ripples Podcast. It's on YouTube, iTunes, wherever you find podcasts.
Excellent, man. Well, thank you so much, and I'll be right back. All right, everybody, you heard it. See, there's more than one way. and we can all kumbaya. I don't have all the answers just because I'm a money guy, right? I'm open to other ideas and concepts. And Chris just shared with you that, you have to be positioned properly to make it through the tough times so that you can continue to prosper in the good times. So, with that, go to moneyripples.com, check them out, check out the podcast. I'm sure they have some incredible ideas, some incredible guests that continue to help you figure out how you can use your time, your resources, and how you can elevate your game so that you and your family can live your best lives ever. I'm Derick Gant. Be your best, bring your best, leave nothing to chance. All right, brother. Good job.
Awesome. Yeah, had a lot of fun.
I enjoyed it, man. I like your story. Your dad, my dad would have been brothers, bro. My dad was like, money don't grow on trees. Get out of here.
I didn't want to share the story because my dad's barely alive still today. I didn't want to share the story where he's literally stolen like salt and pepper shakers from Chinese restaurants because they didn't serve him well enough. He deserved the tip. Like, I was like, he's that cheap.
Oh man, well, I'm sure he is an amazing dude. You're blessed to still have him. Spend as much time you can with them. Both of my parents are gone, so but you love them up as much as you can, man. This will probably go out second week of September.
Perfect.
And I'll shoot you a note and all the fun stuff, and so that you can take a look at it. You can share it if you want to, or however you guys do what you do in your universe. But I'll be checking your stuff out. I'll follow you on LinkedIn and the other spots, and we can collaborate whenever possible.
Yeah, be sure to tag me because my team looks at all that and they try to post all the stuff on Instagram, TikTok, on our email list and everything. We will do. Awesome.
All right, man. Thanks so much. All right.
You bet. See you, Derick. Bye.